All right, welcome to the video, folks. Anthony Special here with Hawkeye Traders, bringing you another live volume interaction I identified. And I want to explain to you the thought process, okay? Because it's very important to put the context of the market in play. And the reason I do these videos is because if you are a trader that is ready to harness volume and price action as your foundation of trading, whether you're doing it already and you're trying to build upon it, or you're just getting started and you're trying to lay that foundation, guys, this is where it all starts, okay? I watch the market live every single day. Why? Because I believe that genuine experience comes from live market conditions. So anybody can look back in hindsight and go, oh yeah, you know, that happened. Sure, I could see that as it's transpiring. No, you can't. There's a lot of emotions that come with it and a lot of discipline that comes with identifying times and place in the market that things may transpire based around your interpretation of volume and price action. Now, I do this live in front of people. Why? Because it's credibility, right? Like, these folks are trading their own live money. If I just did this by myself, like, who's there to hold me accountable? Nobody. So I do this live in front of folks so that there is a credibility factor to this. And I want to explain exactly what I told them based on what the evidence the market provided and how we were able to see volume and price action set a push higher, followed by a break of a key level. And I'm going to tell you exactly the targets that we were looking at to the downside. So let's start off right here, 7:42 a.m. Eastern Standard Time, New York Seaboard time, right? New York Stock Exchange time. We have this massive candle come in. Ultra high buying volume. We got the radar dot. Huge candle full of volume here. Now, I know when I see this, one or two things are going to transpire here, okay? We're going to get a reversal, which is very possible, or we're going to get some follow-through, which is not so likely. So, we call this a green bottom at Hawkeye, okay? Or, you know, we have red tops, green bottoms. This happens to be a wide bar, which is why it's highlighted magenta, just showing you that it is X amount of times greater than the previous bars that have printed over a calculated period of time. So it does tell you to heed warning around this. So for me, it was very simple. Super high buying. Okay, let's see what happens. We push back up. We do not successfully close above the candle. I am very interested in price closing above or below the entire wide bar or the entire place where ultra high volume occurred. So you can see we pushed back up basically to the high. We failed. We rolled back over and retested the low. What did we just create? A double bottom. Very short term, but a double bottom. What is this little high in the middle? That's called the neckline. Okay, now guys, we're talking a very short period of time. 7:42, 7:57. I mean, this is all transpiring very quickly. So, my thought process is, if we break the neckline and close above it, which we did right here on this candle at 8 a.m., we should push towards the last kind of high that we had before the aggressive selling happened. Right? We'd all agree that we kind of pulled back ever so slightly, and then that's where the selling just piled right in. So the neckline here to that prior high, about 47, 48 ticks. That's not a bad trade, right? I mean, you could make a good living off of that. You don't need to catch too many of them to do okay. So that's what happened. So I was like, okay, listen, let's see if there's any further momentum to the upside. But what I'm more carefully watching for is now a close below that double bottom, which happens right over here. Okay, so we're right here and boom. There's the close below the double bottom. Now, that's an aggressive close, okay? Strong selling volume, increasing, wide bar. This trade may not be for everybody. But if this trade is for you, if this trade meets your criteria, I knew it was going to take high selling volume to close below this candle, because why wouldn't it, right? If your highest buying volume transpired right here, why would you not expect to need ultra high selling volume to overcome that buying volume? So that part doesn't surprise me. I kind of discounted that out of the equation because there was a reason for it, right? There's a reason. There's always a reason. You just have to uncover what that reason is. And you could see from here, we had expectations to fall into the following levels based on my analysis. 56 ticks into 2400. 110 ticks into 2394 half. It might be off by 111 ticks, I'm sorry. Into 2392. 135 ticks, and the last projected target to the downside was 2388, offering 177 ticks profit. So, if this trade wasn't for you, maybe this one was. Maybe this one wasn't for you. But either way, volume and price action created a story that simply needed to be read and interpreted, and ultimately played into what the expectations were. Expectation was the break of this short-term bottom to push back to the origin of this selling. The origin of this selling happens right here. That's exactly what it did. Okay? Why? Ultra high buying volume. We revisit this area. We have decreasing volume, and then new buying volume that comes back in pushes us back up. We've now created a pattern, a short-term double bottom with a neckline. All we had to do was close above the neckline, which we did right here. The market drifted and then went right up to where we expected it to. Perfect. Now, we knew ultra high buying volume. The retest had significant buying volume. All we were waiting for was a close below it. Couple things could have happened. We could have closed below it and then retested. We could have closed below it and consolidated. We could have closed below it and tumbled like we did. Listen, the fact of the matter is the volume and price action predicted what would happen because I was able to interpret it. Why am I able to interpret it? Because the Hawkeye software makes it super easy. There's no guesswork. I know who's in control in each bar that prints. It prints the color on the chart. It prints the color and the spike in volume down below. The radar dot tells me where there's high, ultra or ultra low volume. And the wide bar tells me that I need to make sure I got my eyes on the bull here because something perhaps excessive is transpiring. And when something excessive is transpiring, there's either substantial follow-through or a substantial reversal. Because there was a wide bar on ultra high selling volume that broke this area, I felt confident saying there's still a good shot that we push lower because we were breaking an area of ultra high buying volume. What is it going to take to get through ultra high buying volume? Ultra high selling volume. That's right. So if you understand how to put these pieces together, you're very accurately going to be able to look at any market on any time frame and go, can I create a thesis based on the volume and price action that's being printed? And if I can I now put that into context of a trade plan that meets my trade plan criteria and my risk management approach to the market? And if you can do those things, you can take very predictable pushes higher and very predictable pushes lower. That's it. Nobody's playing in the junk, right? We just want very predictable movements. And they can be found by simply employing Hawkeye volume and price action. We're not just going to give you the Hawkeye volume and price action. We're going to give you the mastery training tools as well, because we need you to see the library so that you can put all this together in your mind and, of course, make it happen in real time. So if you want to learn more about that, there's some links below this video. I encourage you to click on them, consume the content, reach out to myself or my Hawkeye Concierge team with any questions you have. We can get this in your hands ASAP so that you can start understanding what's transpiring. God bless, guys. I'll see you in the next video.